Hello guys, this is Raghav. Welcome to the channel Journey to FF, Journey towards the Financial Freedom. So today we are talking about investment. When I say investment is essentially using your money to make more money over time instead of just letting cash sit idle. People put it to work in places where it has a potential to grow. Think of it like planting seeds with the hope they will become fruit bearing trees. What are the different kinds of investments which are available? So, the different types of investments which are available are traditional and low risk investments and market linked investments. So, before we jump into this, I would like to explain what is investment all about. So consider that you are having 1 lakh rupees amount in your bank and you are investing it in a FD for a period of next 1 year for an interest of 7%. So you would be getting 1 lakh 7,000 on completing 1 year period. So your money is growing here. So this is what we call as your capital gain. So investment is essentially growing with the time. So there are multiple such options available in where you can invest and get a capital appreciation. So there are two types basically. One would be the traditional and low risk investments, and the other would be market linked investment. So when we say traditional and low risk investment, the first thing which would come to everyone's mind would be like fixed deposit. So fixed deposit is an investment scheme which is like very safe and stable returns from bank or NBFCs. So the fixed deposits are not only issued by the traditional banks, but also some of the NBFCs also issue the fixed deposit to the public. So the fixed deposits which are offered from the NBFC are considered slightly riskier, considering that they are not fully regulated by the RBI, and whatever the 5 lakh guarantee which has been provided for the fixed deposit made into a traditional bank which is RBI regulated, it doesn't come for the NBFCs. So that's why they would also offer a slightly higher returns compared to your traditional bank. So the next would one be public provident fund. So PPF would offer a long-term government-backed savings with the tax benefit. So it is generally for a period of 15 years, and you have an option to opt in for additional 5 years uh, intervals. So I think you could go up to 30, 35 years based on your interest. And over a period of 30 years, you would get a big corpus with the power of compounding. Right. Next one would be a national savings certificate. So this is also a kind of traditional and low risk scheme where you get a fixed income and it has a lock-in of 5 year, and the interest is also decided from the government of India. So there are multiple post office schemes. So post office in general offer a slightly higher interest rate compared to bank. It would be typically around zero point 0.5 more than most of the traditional banks. So some of the schemes are like monthly income schemes, recurring deposits, etc. So senior citizen savings scheme. This is one of the schemes which is more focused on senior citizen. So they offer a better returns for the senior citizen. Uh, so that way, senior citizens can try to like invest in this particular scheme in order to get a slightly better returns. So market linked investment. So this is the area which we'll be focusing more on. So stocks. So over here, you will be investing in a share of a particular company which you trust or which you believe in, that can grow over a period of time into a big company. So you get a capital appreciation based on the increase in the market value. So this is a high risk and high reward game. So the risk which you take is worth it if you are able to identify the right shares which you need to invest in. So that way, this channel I think will be helping you out more in identifying such shares uh, with the proven methods which is adapted over my investment journey. So we would be focusing more on the stocks as we grow in this channel, and yeah, I'm looking forward for that. So the other one would be like mutual funds. So consider that you do not have any idea what is a share about, what is a company about, whether it will make good or bad. So you what you do it is you provide the fund to your mutual fund company, and they would invest in a mutual fund which is selected by you. So that particular mutual fund in turn invest in a specific stocks, and a fund manager would manage that particular fund for you, uh, and also for some of the other people who are also investing in the same mutual fund, are providing a large chunk of money for them to invest in various stocks based on the kind of mutual funds you select, right? So over here, there could be a large cap mutual fund, medium cap mutual fund, or it could be a small cap mutual fund, it could be a debt fund or a hybrid fund. So over a period, you would get a capital appreciation, and when you redeem that particular mutual fund units, you would get an a big capital appreciation, which is one of the good investment method for someone who is not too familiar with stocks and wanted to take the benefits of equity investing, right? So we would be talking more about such things: which stock to invest, which mutual fund would be better, and which are the stocks I am investing, and what is the reason behind I investing in that particular stock, and what are the things which you need to take care before investing, and how can you make sure your basics are correct before you start investing. So this all will be covered in our future video series. So as of now, I would like to stop here. So if you like this particular video, please to consider subscribing to my channel and hit on like button, and please to share with your friends. So your support would be a real help for me. Thank you guys.